Now let me get down to my predictions. The goal of forecasting is not to predict the future, but to tell you what you need to know to take meaningful action in the present. So here's my predictions. Prediction. U.S. GDP will remain positive for the year, but growth will slow to 2-3%. However, there's several risks that could trigger a black swan event. Now, a lot of people are thinking GDP is going to be a lot stronger next year because we will be fully lifted from lockdowns, people will be back flying, restaurants will be back going, sporting events are already back, so you're going to get that huge big lift as everybody comes back. The reason why I have a lower GDP forecast is because I think we pulled a lot of spending from the future into last year and this year. So I think GDP is going to be slower, and with inflation continuing to move, I think it's going to cripple household spending because all of a sudden if you're spending more on fuel, you're spending more on your food, it's just harder to go use and spend on discretionary items. What are the black swan events? Well, Biden, depending on what the tax package is, if it's too big, it could have a very negative impact on real estate, on equities, a whole host of things. China's property market, we just described that. Could that be a black swan event for the globe? Geopolitical tensions. Could there something happen between China and Taiwan? Could there be a major terrorist attack now that what's happened in Afghanistan? Or could we get a new COVID strain that puts us in panic and some form of lockdown again? Let's hope not. I hope none of these things happen. But you have to look into the future and say, what are events that could trigger a big economic contraction? On the unemployment front, I believe it will continue to decline, but employers will start having difficulty finding qualified candidates due to the labor participation rate remaining low and the lack of skilled labor amongst younger generations. Also, vaccine mandates could have a negative impact on employment. I'll tell you, we have a big problem in this country with our labor force. And you all have experienced it. Try to get, if you're a company and you're making big goods, try to get a high qualified welder. In your home, how long does it take to get an electrician or a plumber? And how much does it cost now? The bulk of a lot of our skilled trade are all in their late 50s and early 60s. They're retiring out. You talk to people in those fields, we don't have the young people coming up behind to take these. We're going to have a big shortages of trade and skilled labor. Vaccine mandates, I don't know what will unfold with that, but you're having problems now. We may have very big disruptions during the holiday traveling season because pilots, air traffic controllers, we've already seen a couple incidences like that. So police forces in Chicago, firefighters in New York, I just can't predict it. Interest rates. My prediction for interest rates, short-term rates will remain anchored at 0 for the first quarter. Maybe one 25 basis point rate move at the beginning of summer. I don't think there will be another one. Could be at the end of the year, but I'm more in the camp of 125 basis point rate increases. I know many on the street are predicting 2. I think it'll more likely be 1. The 10-year Treasury note will experience greater volatility and swing between 130 and 2.25. I don't think the Fed will allow the 10-year Treasury to go more than 2.25. It should be a lot higher than that. I mean, much higher. And if the Fed was out of it, my guess is the 10-year Treasury would be, I don't know, high 2s, low 3s, somewhere around that. But I think they will step in if it starts moving too much beyond 2.25.